Hello everybody, welcome to the technical analysis webinar this afternoon. My name is Troy. I'm a senior account manager with AvaTrade. I'll be presenting today. If you would, type OK in the chat box if you're hearing me clearly and seeing my screen all right. There's a little bit different format for those of you that have come to past webinars. So the chat box is in a different location. So just take a look. Once you find it, type OK in the chat box if you're hearing me clearly and seeing the screen all right. In Duba, the live sessions go for about 45 to 60 minutes, something like that, 50 minutes. You can catch all of them by the next business day. They're uploaded to our YouTube channel. Okay, thanks. I've got enough responses. Looks like we're up and running fine. If you have any issues as we go along, just let me know. Some nice technical movements today. We'll take a look at the charts in a moment. As we get going, keep in mind that, as always, no trades are guaranteed to profit. With each and every trade you make, there is a risk of losing funds. But obviously, we're all here because with each and every trade you make, there's also a good potential to make profits. So it's all about managing your risk, getting entry points that make sense to you. And as you manage your risk, you can think about using stop loss settings. You can use the AvaProtect feature on gold, silver, and FX pairings. That feature is found in our web trader platform and on our AvaTrade Go mobile app. You also can use other methods, hedge trades, that sort of thing, to manage risk. But in some way, you want to manage things in a way that makes sense for your risk tolerance and balance. Keep in mind that as we go over information, it's coming from an educational perspective and shouldn't be taken as financial advisement. Now, what we're looking at here in terms of technical analysis are two different types in general that exist. First of all, if you're brand new to things, welcome. Even if you don't have a live account yet, welcome. Those of you that are experienced traders, also, I believe the sessions will be beneficial for you. So I hope for you to stick around as well. We'll be on the live charts looking at the movement soon. The technical analysis in general, for those who are new, it's looking at the candlestick charts, looking for patterns, repetitive movements that give us an idea maybe of what we think will happen moving forward with the price movements to try and gain an advantage. And so there are manual ways of doing technical analysis, which is what we tend to lean on most in the webinars, which is drawing your own trend lines, support and resistance levels, etc. And we'll go over what all of that means for those of you that are new. And you can use indicators, which also help with your technical analysis. That can help maybe solidify what you already think when an indicator gives you an idea that, hey, it's time to buy or time to sell. Let me just type a quick message. Someone's having an audio issue. Audio is on fine. It is just you. Okay. So as the slide suggests, please feel free to ask questions as we go along. You don't have to wait to the end. Give input as well. If there's something you want to share or look at, feel free to chime in the chat box. All right, so we're on our main website here. I wanted to show you real quick. If you go to trading platforms on our main website, you'll find AvaTrade Go. That's our custom-made mobile app. It trades right on top of your MT4 and MT5 accounts. So it's not some separate account or something. It's an app that you can use to trade on your existing MT4, MT5 account. Obviously, there's also the MT4 mobile app and the MT5 mobile app, but this app that we've created has extra features that are not found on those mobile apps. Some I'm showing you here, AvaProtect. It's a feature on gold, silver, and FX pairings where for a premium cost, you can protect against any and all losses that would occur during the covered time period. It's added back by the protection. If you have losses during that time period, you just pay a small premium when you open the trade for that type of protection. And if the trade goes the right way, of course, that's what you're hoping for, the profits are all yours. You don't have to You don't have to share the profits or something because you already paid the small charge for the protection plan. Now, take profit stop loss, as I'll show you in the WebTrader platform as well. All of these features are there. It calculates your exposure, your potential profit for you as you're setting up your trade in the order window. So it's very nice. To log into the WebTrader platform, you just click this login here at the top. And when you do log in, you'll see this platform. And this is adjustable. Here's your favorites list, most rising, most falling, or by category, cryptos, commodities, stocks, etc. Okay, ETFs, whatever category you'd want. And there's a search tool here. So this already is more convenient than maybe the MT4 platform with those features. But when we go to look at some other assets, like if I want to bring up gold, do a quick search, there's gold, click on it, there's the gold chart. I can inspect the chart, just slide it up or expand it. Okay, can add your indicators from here, change which candles you're looking at, etc. I can minimize it back down to look at my favorites list, however I want to look at it. Now, if then I want to click on gold, buy or sell, this is just an example to show you how we can set this up on the WebTrader platform. Let's say you've done your technical analysis, which we'll do in a bit. In a little bit here, we'll go through the technical analysis. Let's say you know the price that you want to enter, and maybe it's not the current price. And you say, okay, I would like to enter if the price breaks above, I don't know, 1850, then maybe then you're convinced that there'll be an uptrend that will continue. Maybe you're waiting for it to go higher before you buy because you're waiting for an uptrend to start. So you can just say execute when price hits. You put the price, whatever you want. That's it. That's your pending order. Click buy, and it'll buy when it hits that price. Okay. With this platform, you don't have to know that that's called a buy stop. A buy limit is if you're programming a pending order to buy from a lower point. So for those of you that are new, and even for experienced traders, it's much simpler to do your pending orders from this platform, because all you have to do is say execute when price hits. You don't have to tell it what type of pending order it is. The system already knows that. On the MT4 platform, as I'll show you in a little bit, which is very nice for doing charting activities, and we'll do that today. But the pending orders on the MT4, you have to, it's more technical. If you're saying buy when the price hits here, you'd have to then tell it that it's a buy stop pending order. Or if you're telling it to buy from a lower price, you'd have to tell it it's a buy limit pending order, etc. So the pending orders are easier, simpler to execute from this platform, and also from AvaTrade Go, from the mobile app. It works the same way. If you want to add protection, okay, you could say, let me protect for 3 hours. Maybe I'm scalping. Or I could say, let me protect for 2 days, right? Only $59 for 5-ounce position, and I can protect it for 2 full days. The profit potential on 5 ounces in 2 days could be much, much larger. We could see in 1 day gold move $50, $100 an ounce, let alone in 2 days of protection. So you could be protected for 2 full days. Maximum loss would be $59, and your potential profit could be huge if it goes the right way. If you, instead of the protection, want to do, let's say, a stop loss, put your stop loss price. Maybe you say, okay, if it drops below 1800, I'm out. So you put your stop loss at 1800. Maybe you look and you say, wow, I'm risking $180. That's almost 10% of my balance. So then you say, okay, maybe I want a smaller trade. Let's go 3 ounces. And you say, okay, $72 with 2 ounces, 3 ounces, 108. So that maybe I'm more comfortable with that risk. So as you see, based on my trade size and my stop loss price, it's calculating my risk to that price. So it's like a trade calculator built into the order window before you ever buy or sell. So you understand your risk and your potential profit. If I say, okay, I want to take profit at 1900, there's how much I'd make with this trade size. So I see, okay, my potential profit's almost double what I'm risking with that setup. So you can be well informed as you go into your trade. So as you do your technical analysis, you see the lines where you want to take profit, where you want to maybe put your stop loss. you enter that in here, it'll tell you your risk and reward potential to those prices before you place your trade without having to calculate it manually. In Duba, the maximum trade size you can determine here, right? Based on your leverage, the system tells you how much margin is required. So if you have $50 left in your account, you could open this trade size if you have the higher leverage, the 200 to 1 leverage on gold. I would be able to open 3 ounces, no problem. 4 ounces, yeah, I could open 4 ounces. 5 ounces, yep, with $50, the margin requirement's $45.90. With 6 ounces, nope, I couldn't open a 6-ounce position with $50 because I need $55.08 to open that trade. So use this platform and it'll help you answer that question every time. You can take a look and see what size trade could I open, how much margin is required to open it for any given trade size before you try to place the trade. Good question. Yeah, we can go over the Euro USD for sure. It's a request. Swaps, someone's asking what does swap mean. It's the overnight trade cost, correct? It's a slang term for interest, okay? So it's the overnight interest charge to hold trades past 5 p.m. New York time. That's considered the end of trading day, 5 p.m. New York time. Doesn't matter if you open a trade at 4:59 p.m. New York time and it goes to 5:01 New York time and then you close it, even though it was only open for 2 minutes. If it was open and went through that change of trading day time, you get charged the interest. And conversely, you could have a trade open for hours and hours and hours and close it before 5 p.m. New York time, and there is no interest. So it's not about necessarily how long was the trade open. It's was the trade carried from one trading day to the next past 5 p.m. New York time. Okay. And those swap costs are on our website. You just go here, trading info, financial instruments. You see all the spreads, the live spread right here, and the typical spread, and the percent change for the day for any asset group, commodities, stocks, etc. If you want to know more about the asset, you click on the asset and it gives you the swap percentages. Okay, Euro USD, we pay you interest. You see that? It's positive, 0.0031% positive on a sell position. You pay AvaTrade interest on a buy position right now. And those interest rates can change by the month. It's based on the interest rates, the official interest rates on Euro versus the interest rates on USD. That's why it's called swap. You're swapping the interest, okay? Because it's a comparison, Natalie. The swap can be positive, like you see here on Euro USD. It's a comparison between the interest rate on Euro versus USD. So depending which way you're trading, you're borrowing one or borrowing the other, or lending one or lending the other, depending whether you're buying or selling, you could have positive swaps as well. Usually they're not positive. Usually one is a little more negative than the other, but sometimes you'll see a positive swap, okay, which you see here. That's part of the business model of most brokers, is to make a little bit of money on the overnight interest and a little bit of money on spreads. That's the business model of legitimate brokers. We're not hoping someone loses to make a profit. If you profit, great. We've got orders matched both directions. And if we don't, we hedge with outside liquidity. We're a hedging broker. We're happy. The more clients profit, the more you trade, and the more we make in swaps and spreads. Okay. All right. So all that information is here for every asset. Okay. And by the way, if you're searching for an asset, I can type the word gold. There's a lot of things with gold. Goldman Sachs, Barrick Gold, the futures contracts on gold for different months. You'll find lots of stuff listed. Gold miners, that's an ETF that you can trade. All kinds of stuff. So easy search tool here on our website as well. And then you can find, as you click on it, the interest. Okay. And trading hours and all of that stuff. Okay, so let's get into the actual trading strategies. I know a lot of you have questions and it's good to answer them, but let's move on with some trading strategies and ideas. So just a quick look at the fundamentals right now. And by the way, the WebTrader platform has all kinds of features for fundamentals and technicals. You go here, click on the tab at the top left, go to Trading Central. This is only on live accounts, and Market Buzz has all kinds of fundamental news available. Okay, on each asset, once this pops up, you'll see the most trending. Facebook right now is trending huge, Google, Pfizer. So if you click on those, it brings up the fundamental articles. What's going on with Facebook? Facebook breakup would demolish Mark Zuckerberg's social media. Boy, that sounds important. What are they talking about? They're talking about the US trying to maybe break up Facebook so they can't be such a monopoly in terms of owning WhatsApp and some of these other social media tools. They're trying to break that up so Facebook doesn't own all of that potentially. So big news. It's easy to find that news right here, right at your fingertips through Trading Central, which is free on all live accounts. If you have a demo account only, you can't play around with all of these features. You have signals here too, live signals. This is the technical analysis, which is what this webinar is about, right? So here's technical analysis. It tells you the strategy, it tells you the breakout move expected, the price levels, shows you with an arrow, very simple, which way the movement is expected to go. Why would New Zealand dollar climb on USD? Well, maybe there's stimulus coming in the US this week by the end of the week. Boy, that could weaken the USD. If $1 trillion in stimulus is released, USD could weaken. Maybe a breakout move is expected on the New Zealand dollar. Technically speaking, that would be a technical breakout move. And also there's some fundamentals behind why. You can look at lots of signals here. They're here for you each and every day through Trading Central. Okay, now let's look quick at the fundamental articles I found. Looks like bad news for Chinese economy a little bit here. Shipments fall for smartphones in China. That could be bad news on Apple stock then, right? If China looks like they're buying less phones, they're a big consumer economy. This type of article, maybe we want to look at some technical entry points for Apple, since smartphones are a big topic that has a negative story here with that article. And maybe we look for pullbacks. Maybe it already dropped, and it gives you opportunity if you think going through the Christmas season that Apple would do good, right? So you can play it both ways, depending on the technical analysis we look at. German economy to reach pre-crisis level in 2021 if COVID is under control. That's good news, right? That could help European stocks, European indices rise with that type of expectation, especially now that the vaccine's being distributed. So that's a positive headline that they think could reach pre-crisis, pre-COVID levels even within next year. Okay, that quick. So that could be good long-term moves or news for long-term moves potentially on the major European indices. Facebook faces lawsuits. We already talked about that. US government's thinking about breaking up the monopoly they have with Instagram and WhatsApp, all these social media apps that they own. So maybe to make those separate companies, that could hurt Facebook. That could maybe help Instagram and WhatsApp stock. What else? Headlines. European Central Bank to go easy. So that could help European stocks. Brexit goes sour. Boy, that could hurt the pound. If you read into the article, they're saying, boy, the negotiations on Brexit didn't go well yesterday. And some of what the European Central Bank is looking to do maybe could help the European economy. Okay, economic calendar, some good news out of South Africa 2 days in a row. So maybe we look at the ZAR, the South African Rand, for technical entry points. Okay, Baggio, good question. Does economic news mean the market will sell if it's bad? It could mean it already sold, which maybe if then in the bigger picture, you think the opposite movement is right, that's a good technical entry point. Sometimes once you see the news, the movement already occurred. Depends how big the news is, and we have to look and see at the technical analysis. You know, did the Rand already strengthen? My guess is yes, it did. And so then we can look and say, okay, is that a good entry point now maybe to go the opposite direction? Or if it didn't move in the direction that this news you would expect it to move, then maybe you do go in that direction with the news. So it just depends. So we see some driving forces here going on in the markets. We see volatility is down. You see the VIX volatility index. That's a sign of positive sentiment on the markets. When this is red, when the volatility index is red, meaning dropping, that means there's less fear. Usually then the futures are green, which they are. You see here, US futures, Dow Jones, S&P 500 in the green. So fear dropping, volatility index dropping, the futures are green, and the US dollar is weakening. We understand which way the wind's blowing today, positive sentiment. We can see that real quick. So let's then take a look at the charts. We'll quickly look at the charts. This is from the last webinar. For any of you that attended, we looked at natural gas. We saw that there was a gap here up a while back on natural gas, and we saw that natural gas was down near the top of that technical gap. And so usually that serves as support. So we took a buy example off that support level at the top of that gap because natural gas had pulled down. And look what we see. These are one-day candles. We see it bouncing off that support. So we've got to take profit at the next resistance level for natural gas. And our entry point was right down here off the support level, off the top of that gap. And you see we're in profit a little bit, $35. Still looks like a nice entry point for anyone who thinks through the winter months that natural gas is underbought right now to bounce off this support level. You see these wicks, it's having trouble breaking. These are one-day candles. It hit, bounced, hit, bounced, hit, bounced. Okay, so it's trying to climb off of the top of this gap from back in September, October. We see it gapped up. And so it's right at the top of that, acting as support now. If it breaks into the gap, then it could fill the whole gap and drop down here, right? But right now it's confirming that as a support level. So obviously no guarantee that it'll keep climbing, but boy, that's a nice entry point to put your stop loss with limited risk below the top of that gap. And you take profit, the next major resistance level is about 5 times the potential profit of what you'd risk on that move. Okay, so it depends. Lane, you're asking how long does the economic news last? Sometimes only a moment until the next headline breaks, right? So you have to act fast sometimes. So it depends, and it depends what kind of article it is. This story about the US having potential stimulus this week, that's been going on all week, and as is typical in Washington, the Democrats and the Republicans are gaming each other and not just signing a bill right away. It's been going on really since before the election, using it as a political tool. And now that the election is somewhat over, in quotation marks over, there are some protests going on about it, but now that the election's over, I think they'll probably get a deal by the end of the week. So that's more of a long-term story that maybe you can count on, that probably the US will have a big stimulus package, if not today, tomorrow, if not tomorrow, over the weekend, etc. So if you think that would help drive up demand within the economy, demand for oil, drive the stock market back up because of $1 trillion stimulus, then maybe now's the time to get your buy positions in on something like natural gas that could be stimulated to rise in price along with oil if there's a huge stimulus package which increases economic activity and uses more energy then maybe now is a good time to get in on natural gas from this nice low point above a nice technical support level at the top of a gap. Okay, so we covered a few things there for beginners and for advanced traders. Trading the gap, that's a technical strategy for technical analysis. If you see a gap in the history, especially on like one-day candles like we're looking at here, that means this is a gap that this line of support has held for a long time, for months, since September. Since it gapped above there, it did not go down. So it tested it for 3 days in a row and hasn't broken it. So that's obviously not a guaranteed move, but a nice technical entry point. Okay, yeah, Declan, Trump and some of his side don't think the election's over yet. I actually happen to be one to believe there's some legitimate points about dead people voting and people voting who weren't registered in the proper state, on and on and on. But I don't think enough of it can be proven in court to overturn an election. So I think there was shenanigans that went on with the mass mail-in voting that was done in the US at levels never seen before. And boy, they weren't checking signatures and they weren't checking IDs and they were just swinging them through the machines. And there's definite fraud that went on. But to prove it all, to overturn the election, I think the chances are slim to none. So I think we're looking at most likely a President Biden moving forward. And I think eventually everyone will come to that realization. Maybe I give Trump a half of a fraction of 1% chance that they might be able to overturn something. But with this entry point, I think with the stimulus coming, I think that helps support the idea that energies could rise, like natural gas, oil. So this might be a spot you could go after something here. Yeah, maybe Trump runs in 4 more years. Maybe he runs for a second term. All right, so that's natural gas. We could look at some other assets like gold. We see gold has come down a bit in the past day or two. If we look at 1-hour candles, this could be an opportunity, folks. So here's a nice support level here. Okay, since gold broke above this price right here back in early December 2nd, it has not broken this level. It hit, went up, hit, went up. It hit here, went up again, same spot. You see that? That is a technical support level. For anyone who's new to this, support that's been there for a long time is respected more. You tend to get a larger bounce off of it. So since this has been there for days and not just hours, right? Since the beginning of the month, it's been tested once, twice, 3 times, 4 times now, almost a 5th time, and this price level has held. If you're into longer term moves with gold, and if you are into the January effect idea, where people tend to sell off the equities at the end of the year and buy into gold, if you feel gold should go up from now to the end of the year, that's not a bad support level maybe to take a shot at it. What I mean is, you might be wrong, right? But you could put your stop loss below this support. You could take a buy position from where it is now, and your profit potential, if we go to 1-day candles, right? Here's that stop loss that I just drew below that support level. Your potential profit if gold, and let me get rid of this line. Whoops. I want to get rid of this diagonal line. I have to double click to highlight it. There it is. Okay. There, I got rid of it. Okay, so this is where we drew the support level. If you were buying, thinking that gold should rise, look how high gold got not that long ago. 2,069 it got to, almost just a little above that actually, to 2070 or so. That is what, $235 up to the highest resistance that it was at already this year. So to risk what, $5 or $10 to a stop loss down here for a potential profit that's many, many, many times larger, and you could take profit at this first resistance level up here, right? You could take profit at a level like this spot, and you see I have a buy stop on gold here up at this level. If gold hit this price, I had it programmed to buy. Now maybe I need to slide that down, right? I need to get rid of this buy stop. If I was going to do a pending order, I'll show you how that would work. Right now, let's say I did a market move. I buy on gold. Okay, fine. I put my stop loss below this support level at, I don't know, 18.18, 18.17. So modify stop loss. Maybe I say 18.20. Okay. Take profit could be this resistance level here, right? It doesn't have to be all the way to the high. Could be this resistance level. Take profit at 19, say 56. 1956. Okay, so there is a market move. Okay, so I made a market move on gold as a simulation. Stop loss down here below the support level I drew. Limited risk. Let's see, I'm in at 1836. Stop loss at 18.20. So I'm risking $16 per ounce or so, $16 per, or I'm sorry, $16 to my stop loss, and with 10 ounces. So $10 per ounce or per dollar movement if it goes down, because I have 10 ounces in the position. So the number of ounces you have times the distance to your stop loss gives you your risk. So I have 10 ounces with a 0.1 trade size, $16 down to my stop loss. So that's a risk of $160. Okay. If you have, I don't know, 10,000 in your account, that's not a huge percent risk, right? $160, maybe 1.5% or so. Your potential profit to the take profit up here, that's a good $120 up to your take profit, right? So times 10 ounces in the position, that's $1,200 potential profit to this resistance level, where I'm risking much, much less, right? 160. So almost 10 to 1 ratio, somewhere in that range. Edwin, good question. All of the webinars are recorded and on our YouTube channel. There's a section on our YouTube channel for English-based webinars. You'll see my webinars by the same titles that you see when you register, not with my name showing. And then you'll also see other webinars there in English by our Chief Market Analyst, Naeem Aslam. Okay, so they're all there. They're uploaded by the next business day, typically, for watching the recordings. So if you can't catch them live, no problem. Now this support level, when we look at one-day candles, look at this. Look how it's support over here too. Resistance, resistance, resistance. Boom! Once it broke above there on the one-day candles, that's all the way back to July. That acted as a price level of support until this little breakthrough, and then it went right back above, and now it's support again. So that's not a bad move at all, technically speaking. Okay. Could lose, limited risk, could be huge potential reward there on a move like that with gold. Okay, USD ZAR, I promised we would look at. Good question. Declan, how much are you risking to your stop loss using the web trader? So let's quickly go back to that. Web trader here. Let's go to the trade section. If I buy on gold, like I was setting up there, and before I take the trade, if I said, okay, I wanted to do 10 ounces like I just did, right? 10 ounces, I put my stop loss to 18.20, right? That's what I just did, 18.20. There's how much I'm risking. Didn't I do that? I said 10 ounces times $16 to my stop loss is a risk of 160. Look, here's the risk. 159.70, $160. It tells you your risk. It's changing because the entry price is changing by the second right now. But there's my stop loss price. There's my risk. Okay. To that price. Take profit. What did I put? 1956, I think, was my spot. I put my take profit. I got a little carried away there with the numbers. 1956, there's my potential profit, 1200. So before I take the trade, I can say, oh, wow, it's like a 9 to 1 ratio here, potential profit to risk. Maybe I say, wow, I like that. Let me take the trade. Now, I already took it on the other account, so I don't need to place it here. And by the way, you could put protection for a couple days on it too if you wanted. When you're setting it up here, you could put AvaProtect on it. Okay, good question. So what else? USD ZAR. This is interesting. ZAR being South African Rand. So look how much the Rand has pulled the USD down. Down, 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 down. We just saw the Rand had good announcements again today. So this is the low point here that it reached. If we go to 1 minute candles, you see it pushed back down, pulled the USD down a little further. If in the bigger picture, you think the Rand could go back to this type of level, okay, it was 19 plus to 1 against the USD. Boy, if you are in South Africa and you've got, I don't know, a couple million Rand and you want to put it as USD now, could be a good time to deposit into your trading account with Rand and have a USD based trading account. You could potentially, if the USD strengthens back up here after this whole stimulus deal, If the USD strengthens back up, you could have a huge percent gain without even trading. Just having USD sitting in your trading account, because the USD is so low right now. And that's the case against the euro, against the pound, etc. Everything strengthened against the USD as the US was passing out trillions and trillions in stimulus. This is, the trillion they're about to do potentially. They already did 4 times that in stimulus. That's part of what drove the USD down so much. So at some point you could say, wow, maybe I take a buy position on the Rand, put my stop loss down below one of these support levels, and take a shot at the Rand strengthening again, meaning, or I mean at the USD strengthening again against the Rand, which could have a huge potential climb. Okay. Now I don't know that this has found the bottom yet. Might not have found the bottom yet before it could potentially rise, but you get the general idea. If you find a price level that you say, okay, if the USD breaks back above, let's say here, right? If I put this, what kind of pending order could I have waiting that if it establishes an uptrend, if the USD does do an uptrend and break this resistance, then maybe I say now's the reversal. Now the USD might keep climbing. What kind of pending order could I put up here above the resistance level that if it breaks through, then I'm convinced now the USD could start its climb? What kind of pending order buys from a higher point? Declan, the order window that you see in the web trader trades on your MT4 account. That is one way you can trade on your MT4 account. And you get the benefit of when you place the trade from the web trader, it'll show up on your MT4, but you get the benefit of those extra features. You can add AvaProtect, you can use that trade calculator system as you're placing the trade, etc. Natalie, correct. Declan, correct. Buy, stop, pending order. So you don't have to guess then. A lot of times people try and guess the low point. You could say, wow, the Rand really pulled the dollar way down. You look at 1 week candles and you say, okay, I'm guessing that it's going to go up now. And you buy. And then lo and behold, it drops further. A way to avoid that is to say, okay, it's low. It's so low that I can afford to let it start an uptrend before I buy. Because here's the line I drew, right? So on 1 week candles, we see there's still a huge potential to climb, even if I wait for it to establish an uptrend. So when I go from 1 week candles to say 15-minute or 5-minute or 1 hour, this might look like, wow, I'm really giving up a lot of potential profit if I wait for it to go up all this ways before I buy. But you have to understand the bigger picture. If it's a longer term move, then you say, I'm willing to give up some potential profit to buy from a higher point for the benefit of knowing it broke through a resistance level, establishing a strong uptrend, meaning, okay, maybe the plunge is over. Now maybe that's the time to buy. That's the concept of a buy stop, buying from a higher point. You're giving up the lower entry point, buying from a higher point for the benefit of establishing the uptrend first. So then you don't have to guess the low point. And guess what? If this plunged further when the US does stimulus this week potentially, and it might, so if this plunges further, then what you do is you say, okay, now I'll change my buy stop entry. If it breaks above this resistance level, then I'll buy. But that's only if it dropped to a lower point first, right? So each time you find a spot that you say, okay, if it breaks above this resistance, that means it's an uptrend, I'll buy. If it plunges further, put your buy stop at that resistance level. Then if it breaks above that, then it's a reversal and an uptrend, etc. Okay? And you can do that strategy with any asset that you believe has a huge opportunistic entry point after a big plunge like this. Typically, when something goes up rapidly, like you saw here, it can come down rapidly. And same thing, when something comes down rapidly, you can eventually see a rapid reversal back the other way again. Okay, so we can look at the Rand and see this. We can look at how about gold? We see on 1 week candles, look how much gold dropped over these weeks. Okay, look how much it dropped. Look how quickly gold dropped. It went up quick it came down quick. Now it's reaching some support. Maybe now's the time to take a shot at gold, right? And I showed you an example of that. Limited risk. It might go the wrong way and lose. Fine, I re-enter again later. Or if we timed it right and now's the time for the big climb, boy, we could be in for a nice ride and a huge profit, right? Limited risk and potential profit that you see worth that risk. That's the idea. You don't always have to have less risk and more potential profit. You can do it the other way. The closer your take profit is, the more likely it is to hit. So sometimes you can get better results by having the same distance to your take profit as your stop loss. But in these examples, I've shown you ways of having a much shorter distance to your stop loss and having a much greater distance to take profit. And the idea is we're using technical analysis to achieve that, to get opportunistic entry points right above a support level or right below a resistance level. Any questions on any of this before we sum things up? I think we've gone over probably enough. Maybe we'll take a look at one indice and then call it a day. Let me add, by the way, if I do show all, here come all the assets, right? If I right click and do hide all, it leaves only the ones that I have charts open for. You see, I have charts open for these assets, so it left them. And so then if I want to bring all the assets back, I can, or I can search one at a time. I can click symbols, and by category, I can add whatever I want. So maybe I want indices. So I go here and I say US indices. S&P 500. Let's take a look at the S&P 500. I just double clicked on it and it loaded it. Okay, so there's the S&P 500. And wow, look how high it is. Those are 1 week candles on the S&P 500. And remember I said when there's a rapid drop, usually there's a potential for a rapid rise. Look at the rapid drop with the pandemic, right? Rapid drop here. The fastest recovery ever here. Okay. Part of that was the Trump economy, low taxes on corporations, but a lot of it was stimulus. 4 trillion in stimulus added to the US economy, and woo, there went the recovery. Okay. And then we're looking at, if we look in closer, we say, okay, 1 hour candles. This was easy to predict. There could be a pullback, right? After a rapid rise like that, this type of drop. Okay, but what happens after a rapid drop? Even in a micro sense, we're looking at 1 hour candles. Many times you see a rapid rise. Okay, so I see a resistance level up here. I see a support level here. It hit here, went up, hit here, went up, hit here, went up, hit here, went up. And so we're above this support. You could easily say, okay, I'll take a buy on S&P 500. I'll put my stop loss at 36.55 right below the support. Why might the S&P 500 go up? There's expected to be stimulus, right? There's expected to be stimulus. This is an opportunistic entry point on an asset that if stimulus passes this week should rise. It just gave us a nice low entry point on something we actually expect to have good news for by the end of the week, that there might be some stimulus. So why not take a shot at the low point below this support level that already held to say, okay, I'll put a stop loss at 36.55. 36.55 and a take profit near the all-time high, or maybe not the all-time high. I think it was actually, but near the high that it just reached, 37.11, just before that resistance, 37.10 maybe. Okay, so there it is. I'm set up with about double the potential profit to my risk, with a support level working in my favor to bounce it up, hopefully, if it pushes down again, and taking profit before it reaches the major resistance up here. Listen, I only need to profit on a 50%, even 40% of these attempts, and you're going to be an overall profit. You don't have to win even above 50% when you set it up this way, because the potential profits are more than the risk. You see the natural gas is responding nicely. from the last webinar. And that was just a nice patient move, technical entry point, and going with the fundamentals of stimulus coming. Yeah, the vaccine could help too. Canada just approved it today. Their vaccine. The UK already approved it. The US is coming soon with FDA approval, and it'll be mass. The US is so ready. They've got the military, everybody ready for mass distribution immediately. There's a plan in place ready to go. The markets could gap up huge over the weekend, right? There's more of a potential for positive gap now on equities and indices than negative, right? Doesn't mean you couldn't be wrong, but there could be huge movement with bullish pressure if the vaccine approval goes through, which it looks like it should. And if the stimulus goes through, maybe that carries to the weekend. Boy, you could see huge movements. So taking a shot at a buy with limited risk on an asset like this that could be buoyed up by vaccine news and by stimulus news with limited risk and larger potential profit seems to make sense. Now, I'm not here to tell you should buy or sell on anything, but it's the strategy. It's a technical strategy paired with the fundamentals. And in the end, you do what you think is right, of course. All right, everybody, we'll call it quits there. Baggio, there's no one indicator that confirms whether your entry point is correct or not. And honestly, I think the best indicator is your brain. It really is, because you can read the latest headlines like we did. You can look at the fundamental news. You can understand that something like stimulus and vaccine distribution is coming. No indicator knows that. So the best indicator, honestly, and that's why I don't use other indicators much, honestly, is your brain. Okay, everybody, thank you for joining. Good luck with your trading. I think you got maybe some potential big movements coming here today. All right, bye for now.